Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 11, the short exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you don't get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And if you watched the video for this previous exercise, which was 11, okay, I kind of explained where we are in the process, right? But I'm going to go over it again because it's this idea of understanding the concepts that I'm trying to hammer home here. Up to this point in time, we're learning. You've learned, okay, here's how we're going to create the statement of cash flows. Okay, so we're going, we have these here different activities, and then we have the line items for each of those activities. Okay, and you can structure this statement of cash flow by pretty much just a rote mimic copying kind of thing. But of course, when you're looking at these activities, you have to decide which ones apply and which ones don't apply. And if, let's say here in our operating activity, you see I've drawn 4 lines, right? Well, maybe I'm only going to use 3 out of those 4 activities, okay? So when I actually create the activity, when I set it up on my statement of cash flows, I'm only going to have 3 line items. But just because you can choose those 3 line items, you're still going to have to figure out what the numbers are, right? Because you're going to be given data from financial statements. Right, and it's not a matter of just looking for a number on a statement and picking it and sticking it on the statement of cash flows. No, you're going to have to do some kinds of calculation in order to arrive at the numbers. Okay, and the calculation itself is determined by, do you understand the concept that applies to that particular activity? Okay. And if in the last video for 11-11, we talked about fixed assets, making the adjustment for the fixed asset. But when you think about fixed assets, you have to take into consideration depreciation. Okay, and that's what I mean by understanding the whole concept. You can look at an asset and see a beginning and ending balance, but you can't just subtract the two and say, oh, that's the change. No, you have to think about the entire concept. When you're looking at something like fixed assets, you have to consider depreciation. And if you looked in 11-10, we looked at a collection from customers, and we looked at payments for inventory, where again, it's not just a simple pick a number on a financial statement or just subtract 2 numbers on a financial statement, because the financial statements and the concepts are interrelated, and you have to understand the totality of the concept and apply it to the situation at hand. Now, the more of these you do, this is the good news. The more of these you do, you're going to be exposed to the thinking behind the concepts, which you should already know, but it'll be a good refresher, and it's something that you can, kind of like follow and mimic along, right? But when you're in that situation where you're doing a problem, or you're trying to create it yourself, you should be able to think it through in your head without having to dig through a book or dig through exercises to see which part of that exercise applies to the situation that you're dealing with at this moment in time. So just, keep that in mind. All right. Calculate certain investing and financing information. All right. Use the information from the data in 11-10. All right, let me grab that since I did not do that. Oops. On the slide here, let me do some quick copy. Paste. There we go. And then I'm going to copy paste. There we go. All right. Didn't realize that I had to use that data. All right, no biggie. We've got what we need now. All right, so it says 1. Borrowing or payment of long-term notes payable, assuming Inland had only one long-term note payable transaction during the year. Okay. All right, so number 1, again, I like using the T accounts. Oh, I use the, oh boy. Sorry about this. Copy the same information twice. There we go. There we go. Okay. All right, so we have our long-term notes payable. So we're looking at the 75 and the 62. Okay. So if we start out with 75 and our ending balance is going to be 62, how much is the payment on the notes payable, right? Well, as far as this is concerned, this is a case where it's basically just the difference between the two. 75 less 62 is 13, right? And so we have a debit for $13,000, right? And the reason for this is because when we have a note payable, right? If you think about the transactions, you're going to debit the cash that you received, and you're going to credit your note payable, right? Now, when you go to pay it off, you're going to debit your note payable, and you're going to credit your cash, right? So the debit to note payable, right, is that 13,000, right? Notice that we don't have to think about any other accounts that affect our note payable, right? So in this particular case, yeah, we can just subtract those two, one number from the other, and to arrive at our balance, because really nothing else affects our long-term note payable, right? Versus like we did in the last exercise with fixed assets having depreciation affect it. Right, so pause the video here if you have to, and go ahead and copy that down because I'm going to erase this. Okay, now number 2 here, it says issuance of common stock. Right. Assuming Inland had only one common stock transaction during the year. Right, so we have common stock. So our common stock started at 30,000. Right, and it ended at 41,000. Okay. Now, what else affects common stock? Really, nothing else. Okay. It does if we're thinking about treasury stock. Okay, but notice we don't have any treasury stock. Okay, if we had treasury stock, we would have to take that into consideration because that's going to reduce. When we our common stock. When we buy back our common stock, it becomes treasury stock. But in this case here, we don't have any, so this ends up being another case of a simple situation where we're going to subtract one from the other and get an answer of 11,000. Okay, so we ended up with 41,000, and we started out with 30. So that means the difference between the two is 11. We sold and we issued an additional $11,000 of common stock. Right? So go ahead and pause the video, and because I'm going to erase that. Okay. And then number 3, the payment of a cash dividend. Okay. All right. Now, if we're going to pay a cash dividend, where does that come from? Retained earnings. Right. So I have a beginning balance of 255,000, right? And I end up with 290,000. Okay. Now, what affects retained earnings and what affects dividends? Okay. When we have a beginning balance in our retained earnings, okay, and what do we have to do? We have to close out our net income or our net loss from our income statement to our retained earnings. So in this case here, we have to add in the $97,000 from the net income, right? But if the question said, well, what was the difference in my retained earnings, that's just fine. I would just add those two together, okay? But obviously, since I'm trying to find out what the payment of cash dividends is, that would be a credit to my retained earnings, meaning I'm going to take that money out of retained earnings and pay the cash dividend, right? So we know 3 out of 4, and we have to do the math, okay? So if I have 255 plus 97, okay, minus some amount, and it ends up being 290, all right? Let's do the math. 255 plus the 97, that's 12, 14, 15, 352. And then we are going to subtract out the 290, and that means we have 62,000 is what was paid as a cash dividend for payment. That's what was paid out in order to pay the cash dividend, $62,000. Okay, and so for this exercise, and this was kind of good in that, yeah, for our first one, it was just a matter of taking two numbers, subtracting the two. And the second one was, yeah, we're taking two numbers, subtracting the two, but we have to look to see if, what else affects it. I mean, treasury stock affects the common stock. Okay, but now with the retained earnings, and we're thinking about the totality of the concept, what we have to think about, okay, what affects retained earnings? You start with a beginning balance, and income, from your income statement, your profit or loss from your income statement affects your retained earnings, and also the payment of a cash dividend. Okay. Now notice a stock dividend does not affect retained earnings. Okay, because you're just generating more, additional shares of stock. Okay, but for a cash payment, that cash dividend comes out of retained earnings. So you have to take into consideration all of those various parts in order to arrive at whatever figure it is that you're looking for. In this case here, it was the payment of cash dividends. All right, so I hope you understood that, and if not, go back and pause or watch the video again. And from here we're going to move into the exercises. I didn't look at the exercises too much. I did look at the problems to see if we were generating a lot more statements of cash flows, which we will actually be creating them. But everything that you've done in these short exercises have built you up to the point where, in a step-by-step process, as to how to be able to generate your own statements of cash flows. So if you have any questions or you don't understand something, go back to the theory videos, and if you're still not getting it, feel free to contact an instructor.